Hey investors and hello my fellow Canadians. I'm here today to tell you all about the Very Good Food Company's third quarterly results in 2020, and I'm very proud to share with you its highlights as well as my personal thoughts on it. If you don't know the Very Good Food Company, they are a plant-based company that makes plant-based foods using vegetables and spices, all pure vegetarian base. Now, as an investor of this company, it's very important to look at its quarterly results, and it ended in September 30th, 2020. So basically, this quarter is performance in July, August, and September. So it's the summertime going slowly into the fall time. First off, let's take a look and read Mitchell Scott, the CEO's words. We are particularly happy with our results this quarter as we're able to generate an increase in revenue in spite of production constraints and the worsening coronavirus landscape that's changing our industry. First off, let's take a look at the revenue then. That's what Mitchell Scott mentioned. A revenue of $1.3 million, growth of 26% over the prior quarter, and 322% growth year over year. That number is just completely shocking and just shows to us how big this company is growing just year over year, especially the steps it's improved within this 1 year period. That's amazing in itself. Anytime, especially during this virus time, you see a company growing like this, that should give you confidence that this will be more of a long-term trend rather than just a short-term trend. And especially with plant-based food products, it's more of a long-based lifestyle choice rather than just a short-term trend. So that's great to hear. Look at that revenue growth. As we move closer to the initial launch date of our upcoming facilities, we remain committed to operating our business in a focused manner. We're making the necessary investments to ensure that the new facilities are with the right equipment and right staff to meet the demands for our products. Very broad message and very simple as well. Not much really needs to be said, but it's effective in its own way. Now, taking a look at its other data numbers, we have gross margin of 39% over a 9-month period and an improvement of 28% in 2019. That's an improvement of about 10% for gross margin products. If you don't know what that is, gross margin is basically how much money you earn back from selling the product when you also include the production costs. So basically, how much revenue you take back from the customer after all the production costs. That's really great. Another 10% increase shows that they're actually getting to more profitability, and it's better for the company in itself. They're having more cost efficient, equipment, products, right? Equipment and product production. We also have the production volume, so basically how much it's sold, about 126,000 pounds in the 3 months, increase of 37% compared to the last quarter. Again, shows you the higher demands for this product, and consumers are liking it so far. Good to hear. Now, this is the main part that I want to talk about, the total assets. They have about 50 million, and guess what? The cash that they have is about 8 million compared to 400,000 last year. Okay, that's almost like 20 times the amount of cash that they have. And it's due to the recent buy-in and demand from investors. It used to be about $1 something if you look at it in a few months ago. Yeah, $1 something, $1.50. And in the past few months, it shot up all the way to $4 or $5, increasing its market capitalization by about 2 or 3 times. And with more investors like that, it helps the company raise more cash to have more equity and flexibility to expand themselves. And that's what we investors are doing with our money. We're supporting them in a way and hoping that they're gonna reach their top potential whenever it may be. Now, their net loss, it's still at about $4 million for the quarter, about 6 cents per share. So basically, this is still not a profitable quarter for them. And I do feel as time goes on, they get better with the cost efficiency, with their products and all, they will get back to profitability. They will get to profitability, But I think what they want to really go for is more of the market share for their products. It's all right. Investors like me, I'm all right if you're losing money right now. As long as you're gaining market share and all, once your name becomes much more popular, just as popular as Beyond Meat, when I go to Whole Foods right now, I see Beyond Meat, but I see the very good food company's products right beside it. Once I see customers buying more of that and having more awareness that, oh, there's a company like this that's just as nutritious or even better in nutrition than Beyond Meat, then that makes me confident that this company is going in the right direction. And later on, yes, once you gain market share, then focus more on profitability. All right. But right now, most importantly, focusing on profitability. Now, some of their key highlights that they wanted to talk about is how they signed a lease for the production factory in California. It's called the Patterson factory. That's going to be America's long-term facility for them in producing their products. That's what it is. So that's happening next year. And as well, they also have a new facility in Mount Pleasant, which is near Vancouver. And it's been finalized, and that they're gonna start to have another butcher shop there and a restaurant. Their main one is in Victoria, and now they're moving here to Vancouver. It's just gonna create them a lot more stability as well as another distribution area, because Vancouver is actually a very big popular city for these type of foods. And then later on, they talked about how basically they signed a new production facility in Vancouver, also another one called the Rupert facility, where it's actually pretty big in about 45,000 square feet, and that's gonna obviously produce a lot of pounds of products. And expect these three main factories, especially the one in America, to really expand vitally in the next 2 or 3 years. It's going to be built, and I just want to see the amount of production and the margin cost with that, the efficiency as well. So right now it's still in its baby stage. It's still being built. Give it about a year or 2 or 3 to really truly analyze this company. It's still in its baby stages, like I've said. It will continue to grow, but at what pace will it grow at? That's my question for it. And for me, I think it's going to grow at a really steady and fast pace. That's what I think. So, still as an investor of this company, I am not selling out of my shares. I believe I've bought in $10,000 of this company at about average cost of $1.75. Still, I want to see its true potential. My highest potential that I see this company is that reaching half of what Beyond Meat could do. You see, Beyond Meat is about $8 billion market cap. This is only almost a $300 million market cap. It's about 50 times to 100 times bigger. I think it can get to even half of what Beyond Meat is, even to a $4 billion market cap. This company will represent Canada in itself as the most popular plant-based company. And with that story narrative of two Canadian chefs as well as just partners working together, that creates a better narrative for us Canadians to buy and support this national company rather than this American company. That's how I think it is. So thank you very much for watching. I hope you all learned something from me in this video. And if you're interested in trying some of their products, go for it. Just go to theverygoodfoodcompany.com. You can get this only in Canada right now. And if you're interested, you can go to their grocery stores like Whole Foods, IGA, Foods Market, Choices Market. And yeah, hope you all have a good experience trying it. And thank you all for watching. See you later.